Hi there, thank you for checking out Keystone TV. The fact that you're watching this video shows that you care about your financial well-being and that you want to improve your financial future. What I want to talk with you about today is a very secret strategy. A strategy that's made double-digit returns for the last 30 years. And you may be wondering, well, what is it, John? What is it? Well, here's what it is. It wasn't buying the right stock. It wasn't finding the best mutual fund. And it wasn't knowing when to time the market, how to get in, how to get out. Actually, the way that you could have made over 11% per year for the last 30 years was simply buying the S&P 500. Buying the S&P 500 index, the 500 largest US stocks, and holding them and not making any changes over the last 30 years. You would have had over 25 times your money and made over 11% per year. Now you say, that doesn't sound very secretive, John. And it doesn't, but the reason I'm sort of facetiously joking and saying that it's a secret strategy is if it is so obvious that that's how you could have made double-digit returns on your money, why have investors for the last 30 years been listening to their commission-driven advisor who gets paid for them to move things around from one spot to another? Why do we listen to Jim Cramer? I mean, why in the world are we listening to what his recommendations are and what to buy and what to sell? What are other things we do? Well, we get on and we look at all the analytics on Morningstar. Is it a 5-star mutual fund? Is it a 4-star fund? How is this mutual fund manager done for the last 10-year period? I have an idea for you. How about you just prudently invest your money? And like I say, if that was just in the 500 largest US stocks over the last 30 years, you would have made 11% per year. Unfortunately, all the data shows us that the average investor here in America that was invested in stocks during that same period of time barely made over 3%. So the 500 largest companies made over 11 for the last 30 years, and the average investor has made under 4. That's depressing. That's discouraging. A diversified portfolio, right? A diversified stock portfolio that was globally diversified and had micro cap and small cap and value and other asset classes besides just large US stocks actually did well over 12% a year for the last 30 years. So none of that is to say, or is promissory, is to say that that's exactly what the market will return the next 30 years. Of course, that would be foolish to think that. But what I'm pointing out is, why are we seeking all of these other things that we think are going to deliver us these phenomenal returns, when in actuality, our returns are driven primarily by our own behavior and our ability to maintain good behavior over long periods of time. So you need to find a coach, an independent, objective advisor that can help provide you advice that fits your goals, your needs, and help sift through some of these myths and is able to share with you the truth like I have today, that you don't need to find the right things. You don't need to know when the market's going to go up or when it's going to go down to have success as an investor. It's actually much more driven by prudently building out a portfolio and then maintaining really good behavior over long periods of time. And if you don't have somebody that can help do that for you, or you have somebody that's saying things counter to what I'm just sharing with you, then you probably need to look for other options because your financial health depends on it. Hope that you found this helpful. If you liked this video or want to check out some of our other videos, you can view them at our website, KeystoneWealthPartners.com. And they're also available on our Facebook page at Keystone Law Firm and Wealth Partners. Take care, and we'll talk to you soon.